Everyone is always talking about ETFs, mutual funds, and index funds, but not everyone understands what are the main differences between them. When you first start to invest, those terms can become very hard and very confusing to understand. But in this video, you will find what are the main characteristics between all of these funds. And you will also discover what is the best fund according to your needs. So let's start with the elder in the funds category, which is the mutual funds. In fact, the first ever mutual fund was created more than 250 years ago in 1774. This happened when a Dutch merchant decided to create the first fund ever, which was actually named Unity Creates Strength. And eventually, in the two last centuries, we've seen a rise in the popularity of this kind of investment. The main objective of this kind of fund is to help the people to pool their money and to be able to invest all together. The big pro of mutual funds on your side is the fact that when you buy one ticker with the mutual fund, you can actually receive a ton of different companies in the form of stocks or even bonds. If it wasn't for this kind of fund, it would mean that you would need on your side to pick each and every single stock that you would like in your portfolio. This method could become very expensive very fast. And what is really interesting about mutual fund is that they are always managed by some professional in the financial field. And usually all the different teams of financial analysts that are working in those mutual funds companies are opting for some actively managed strategies. That means that they are working during all the year on this fund to be able to make it very efficient in terms of return versus risk. Those professionals that are led by the fund manager will always strive to be able to use the best investment strategy to reach what is the goal of the fund. That means that they are usually able to react to all the different events that happen on the market. And on your side, this will help a lot in the diversification of your overall portfolio by reducing the risk. Another big advantage from this kind of fund is that you have access to automatic reinvestment plans. It means that every time that the fund is giving some distribution to its holders, you have the possibility to reinvest this amount in the fund itself. And eventually, with this compound interest, you will be able to grow your capital even more. However, the big con of this kind of fund is coming from the fees. Since those kind of funds are using some actively managed strategy, it means that the team of analysts and the fund manager will always work on the different funds strategy to optimize it, and that means that they will need to be paid a lot. Usually you can count on fees of about 1 to 2% per year, which would represent about $100 to $200 per $10,000 invest. So you see that this represents way more fees compared to the famous ETFs. Now talking about ETFs or exchange trade funds, those kind of funds are way more recent than the usual mutual funds, with the most recent ETFs that was created in 1993, which was SPY. However, the approach of the ETFs is very similar to what is the approach of mutual funds. In fact, with ETFs, the investors also pool their money together to be able to invest in different securities. So the fund itself can buy, for example, stocks and even bonds. On their side, however, they are usually tracking a certain index, a sector, or even a commodity. However, one of the main differences with the mutual fund is that with ETFs, you can purchase them normally on the stock market. It means that you can buy it as if you were buying, for example, a stock. So on your part, usually it will cost you a lower minimal investment, while the usual mutual funds minimum to invest in is starting usually about $1,000. The exchange trade funds are also offering to you a large variety of different investing strategies. You can, for example, invest in currency ETFs, which are tracking some different currencies from all around the world. There are also the possibility to buy some inverse ETFs, which is basically a bet that is made by the ETF itself to short different stocks, which means that you will make money when the stock market is gonna go down. And you also have the famous leverage ETFs, which could help you to take a 2, 3, or even 4 times bigger position than what you could normally, for example, in a certain sector. So you can have 2, 3, or even 4 times the return of it, but you can also have that much more risk. And one of the big pros that come from the ETFs in general is the fact that you can obtain some passively managed strategy with it. That means that On your side, you will pay less fees compared to the usual mutual fund. Often you will pay less than 1% of fees per year, which represent less than $100 of fees with $10,000 invest. And these passively managed funds can be used, for example, to track a certain index, just like the S&P 500 in the US. Keep in mind that you also have access when you buy ETFs to actively manage funds. But just like mutual funds, you will also pay some higher fees on it. And the last big advantage of ETFs is coming from the tax efficiency. Compared to the usual mutual funds where they are giving some distribution to its holders, on their side they will use the money to buy what is called some creation units, and you are going to be taxed only when you're going to sell the different funds. Now for the last kind of fund, I will present to you what are the index funds. As their name are saying it, those kind of funds have the objective to track the different components of market index. What is really interesting about those kind of funds is that it can be both a mutual funds or even an exchange trade fund. So its main goal is obviously to have a wide exposure to the market, also by having some super low fees and also by having some super low asset turnover, which means that all the different components and holdings of this fund are not often buy and sell, which has the impact to have some great tax efficiency. A legend of the game, Warren Buffett, has also recommended to anyone that wants to invest for their retirement to buy some index funds. In fact, he is claiming that for all those super low fees, you are able to reach a way better diversification compared to, for example, doing some stock picking. However, since this fund is obviously passively managed, it means that this kind of fund is also very depending on all the different events that could occur on the stock market. It also means that they have some super low fees. So it could be great for anyone that is looking to have some higher return on the long term with some potential higher risk, however, on the short term. And usually, just like the passively managed ETFs, those kind of funds are costing less than 1% of fees per year, which represent less than $100 of fees per $10,000 invest. To summarize all of this, you basically have two options that are offered to you. The first choice that you have is the mutual funds, which is basically a fund that is usually actively managed by some professional, and on their side they will make sure that they have the best strategy depending on all the different events that happen on the market, but you will have to pay some higher fees on your side. On the upper end, if you prefer a passively managed strategies, you could opt for the ETFs. It could be a great option for you if you want to buy it straight on the stock market and if you want to pay some lower fees. However, those kind of passively managed ETFs will not give you the possibility to adapt to all the different events that happen on the stock market. But if you don't mind to pay some slightly higher fees, you could also buy some actively managed ETFs. And basically the index funds are a mix of mutual funds and ETFs, only with some passive management strategies. And if you want to discover why I personally believe that the ETFs are the best way to invest in the stock market, make sure to check out the video that is going to be right over here, and make sure that you join the North family by subscribing to the channel for only $0.0, and I will see you soon. Peace!